got Siddharth Khemka joining in on the show right now, Kunal Bothra is well on the show, and we have Osha Krishnan too joining in on the technicals. Gentlemen, hi, afternoon to all of you. Kunal, how are you reading into this 150-point dip on the index?
Well, I think most of the points which you highlighted, for example, the carry forward sentiment across the globe, I think that's the bigger concern for the markets right now. And after this, 1% to 2% downtick broadly for many of the emerging markets, after that kind of a handover, I think if we are 0.5% to 0.1, 0.6% odd negative for the indices, it will still be considered as a day of consolidation. The only change of pattern today which we're seeing is many of the large cap private sector banking names are at the receiving end, and the likes of ICICI Bank, specifically the stock breaking below the 1100 mark, which was a key technical short-term support for the stock over the near term. I think and Reliance Industries, of course, coming back to the previous swing lows of 2900. So that's the only change of pattern as such which we can sense for the markets. But 22,700 remains to be a key short-term support. We highlighted this yesterday and today morning also. We've managed to bounce or at least protect those levels on an intraday basis for the Nifty spot. So we'll just hope and expect that over the next half an hour or so, the Nifty holds on to the 22,700 levels.
Okay, point taken. Let me take it across to Osho as well, who's joining us on the show. Osho, what do you think? What about the Bank Nifty? There was a bit of a possibility of a recovery in that. Earlier we were talking about a bit of an outperformance, but that's clearly fizzled out today. Where do you see it headed on the expiry day now?
Very good afternoon to all the panel members. Well, coming to Bank Nifty, we have seen a very strong move in the last 2 to 3 couple of trading sessions. So today being the monthly expiry, some cool off or some profit booking was expected because majority long unwinding can be seen in Bank Nifty. So I was expecting a dip, but it has been a heavy dip than what was expected. But near about looking at the overall trend, 48,600, 48,650 still has a room. So I'm expecting that Bank Nifty should expire near about 600 odd levels. While on the lower end, the support still lies around 48,400 odd levels on spot levels. So any dip towards 48,400, that will be auguring well for the buyers for the timing, but stay sidelines from Bank Nifty because there can be some kind of struggle or challenges that can be seen because of the overall momentum that we are witnessing in the market.
Right, okay. Siddharth, hi, afternoon. Let me get you in on the show as well. What do you think we're headed in for? A sell on news kind of market, 4th June, and you think a market which is already sort of easing off, does it have a chance to go up or you think it'll be down?
Aisha, so I think there are very possible scenarios and outcomes, and based on that, the market could react. There is a lot of talks and a lot of reports that are now being floated around with respect to how market would react to the number that the BJP garners. So anything between that 310, 320 would be a scenario where I would believe that it is a news or event that is already discounted for, and we could see some partial profit booking after that. But if BJP manages on its own something like a 340, 350, that will definitely enthusiast the market to some extent. And overall, what we are expecting is that barring few days of volatility, market focus will return to fundamentals. And if you look at both on the macro as well as on the micro front, India stands pretty confidently with the 6.5+% growth expected for the next 2 years and 16 to 18% corporate earnings growth again for the next 2 years. So I think with the both macros as well as micros in place, even Nifty valuations are not that uncomfortable at 20 times 1 year forward. We believe there could be a significant room for upside, given that A, the political continuity will happen, B, good monsoon has been forecasted for this year, and then C, there will be an interest rate cut cycle which will start later toward the later part of this year, and all these would continue to support the corporate earnings. So we remain constructive, although near term, based on the number that will come on 4th, there could be a volatility in the near term.
I just wanted to highlight the stock of Samvardhana Motherson because that stock is reacting to the earnings. The numbers I think have just hit the exchanges, and for now there is a bit of a reaction on the stock. So Samil has actually seen a vertical move right now. Even Heidelberg's numbers up for you on the screen. There also there's a decent improvement in profitability and margins. Let's pull up the stock of Heidelberg Cement as well and see whether in the last few minutes there has been a reaction or not. But in the meantime, if I can come to you, Kunal, for Samil as well as Heidelberg Cement, what would be your take on the charts?
So I think Motherson Sumi is something interesting, Samil. I think trading at 140 plus levels. So far, the recent price patterns have been very stable for the stock. I think I remember, I think, tracking the stock when it was breaking past about the 105, 109 barrier almost 6-8 months back. And from there on, the stock had gone through a very gradual uptrend. So even at current levels of 140, 143, it looks attractive, for a continuation bet further for the upside. Maybe 153 could be a next set of target for the stock. But I think Heidelberg Cement could be interesting because the stock just last week or so was showing signs of a death crossover where the 50 DMA had crossed below the 200-day moving average. The stock was trading below the 200 levels for quite some time in that time span. But now with this price volume uptick, the stock is come back above the 50 and the 200-day moving average. So we need to see if the stock sees a follow-through up move even for the next few days. There could be a strong reversal, positive reversal for the stock over the near to medium term. So a stock which could be kept on radar, but I think next couple of days of follow through could be more important to watch out for.
Just reading out the numbers of Samil, and there are sizable beat versus expectation, it seems, because the revenue has come in at 27,000 odd crores versus 22,000 crore in the last year, and the profitability has come in at 1,440 crores versus 700 crores last year. So there's a sizable move on a year-on-year basis, and my understanding is that perhaps estimates also were a little lower than this, so they've managed to beat the street expectations. Siddharth, do you have a view on Motherson?
I think overall Motherson, we have a positive view in the auto ancillary space. The company has been doing well. Even the stock price is at all-time high. So we continue to remain positive. We have a target price of 150, sorry. But if you look at the core business, that has been doing well, and the OEMs business, especially if you see most of the auto companies, they are seeing good recovery, be it the passenger vehicle segment, be it the CV cycle, which is kind of again showing some recovery, and even the two-wheelers. And on back of that, we believe that the auto and space, especially in India, they are benefiting out of the growth, not only in India, but a lot of demand outside India for some of these core electricals and the other ancillary units that Motherson provides. We are also seeing the content per vehicle, the electrification is also helping increase that, and that is leading to more and more demand for products from Samvardhan. So overall, we remain positive on Samvardhan. The stock price has definitely moved up, and we see the stock to continue to do well.
Okay, point taken. So that's the view coming in on Samvardhana. Definitely a big beat versus the margin expectation as well. 11% thereabouts, 10.9% to be precise, versus 9.2 thereabouts that they had delivered 9.1% a year ago. So stock is seeing a bit of a move. But let's move on and talk about some of the other big buzzers in the trading session. You have Campus Activewear up a solid 17%. Titagar Wagons is also up 10%. Sumitomo Chemicals continues its up move 7% higher, and Hudco as well. In fact, defense back, the likes of Mazgaon Dock, Cochin Shipyard, they also continue to be around 5 to 7% higher. Siddharth, what would be your view on that? Defense has become a bit of a black box because you're tempted to book profits on one hand, but at the same time, you're worried that these stocks just might continue to move higher and you'll miss out on the rally.
Yeah, Anisha, I think that's a conundrum that you face when a sector which has not done well for a very long time and starts performing and delivering results quarter after quarter. So I think market is definitely looking at the longer term picture, not the next 1 or 2 years, but is looking at the decadal story where these companies not only are sitting on a high record order book, but they are also expanding capacities, and they are also looking at exports as a key growth driver going forward. So it would be a very difficult call to say whether the valuations are comfortable or not, but we have seen that market continues to value high growth companies and continues to give them premium valuation. So some of these large companies, they continue to trade at higher valuation. Look at BEL, which we believe is doing well and would continue to do well. within the defense space. So we have a positive view there, and we continue to like Bharat Electronics within the overall pack, given its focus on the electronics, which is kind of again doing well within the overall defense space.
We're going to take a very quick break on that note. Of course, earnings reaction from Samvardhana Motherson, as we highlighted, trickling in. Jubilant Foodworks, ABFRL, and then, of course, Hindalco, Nalco are your big buzzers today. We'll address all of those on the other side. Back with closing trades right here in ET now. ABFRL, of course, has shot up a good 4%. I don't know what the closest peer trend is up to. That, in any case, has been sitting at an all-time high. We should bring up that intraday graph as well for you. Holding up smartly, a good 1.5%, 46.85 on that stock. Jubilant Foodworks, AU Bank, these are some of the other buzzers in trade. And today you're seeing a bit of a rotation within the pharma pack. It's no more Divi's, it's actually Sun Pharma which is taking the lead with that 2% gain. But Kunal, let's revisit the chart, ABFRL, considering you've been recommending this stock for a while, and Jubilant Foodworks as well. I think this is the second day of a spurt on this one.
Yeah, so Jubilant Food, I think just last week I'd recommended a buy with a target of 520. My expectation was that the stock should slowly and gradually come back above its 200-day moving average. So I think it took some 3-4 days for the stock to get back into the thick of rally. Post result, there was a correction for the stock from, I think, 490. The stock had corrected back towards 470 mark. But I think again, it's made a very strong comeback. It's almost like a V-shaped recovery for Jubilant Food, and of course the 200 DMA has been broken on the upside, which means we could be looking at a start of a decent medium-term uptrend now for the stock. So would look out for higher targets now in the range of 660 to 680 for Jubilant Food. I think traders could look at a further continuation hold from current levels also. ABFRL on the other hand, I think is a very strong and interesting chart on the medium-term time scale now, because what started off as more of a short-term breakout from 220 to 240 to 50 plus mark is now resulting into a more of a monthly breakout. So the stock has now formed a bullish engulfing pattern on the monthly time frame, engulfing 12 previous months of negative price action for itself. So that's a very strong indication of a change of trend, change of behavior for ABFRL. Would continue to have a bullish stance and would look out for targets in the range of previous major highs. So I think 350 could be the next set of targets for ABFRL.
Okay, so that's about ABFRL as well as Jubilant Foodworks. But the metals pack is also fairly active. The best performing sector today, you have Nalco, which is high by 3%. Hindalco, of course, is reacting to that Novelis IPO news and the fact that Tata Steel will report numbers today. Osha, I would want your view regarding some of these stocks, and then perhaps we can get Asesha also on board to talk to us about Hindalco and Tata Steel expectations, and of course Hindalco, what Novelis IPO value means. But before that, Osha, within the metals pack, which will be the top recommendation?
See, from the metal pack, there are many counters which are looking very positive. Firstly, the Hindalco. Hindalco has seen a very strong move that is also backed by the volume. So 700 now should be acting as a support zone for this counter, and 715 to 18 can be seen as the initial target for this counter. Apart from Hindalco, JSL is also looking very positive. One can definitely look for this counter because Jindal Stainless has been into a consolidation for a longer period as of now, but it is hovering at the higher band of the consolidation. So any breakthrough above the zone of 725 can provide a very strong thrust in this counter for higher target of nearly 750 to 60 in short-term perspective. Overall structure for this counter is very positive, and again 700 should be acting as a very strong support for JSL.
Right. Okay. In fact, since on that subject, let me first take it across to Asesha, find out what the Tata Steel poll is penciling in. Remember, the numbers are due today.
Well, yes, we are expecting mixed set of numbers from Tata Steel this time around. European EBITDA per ton losses are expected to narrow on a sequential basis. As far as India operations are concerned, they are likely to be impacted by lower realizations and higher coking coal consumption costs in the fourth quarter. As far as numbers are concerned, consolidated revenues could come in at 57,521 crores, which is an uptick of about 4% on a sequential basis. Margins, however, could contract. We are expecting margins at 10.8%. versus 11.3% that the company had reported in the third quarter. As I mentioned, European operations are expected to report good set of numbers this time around. Volumes that the company has reported saw an uptick of about 7.7% on a sequential basis. Higher sales volumes, higher realizations are expected to aid European operations, and Europe EBITDA per ton loss is expected to narrow to about $105 to $115 per ton versus $178 per ton loss that the company had reported in the previous quarter. As far as India operations are concerned, volume growth of about 11% is what the company has already reported. Lower realizations and higher coking coal consumption costs are expected to impact spreads. So for India operations, EBITDA per ton is expected to decline by about 15% on a sequential basis to 15,000 rupees per ton. In terms of management commentary to watch out for, commentary with respect to transition of its UK business and capex guidance for the next 2 to 3 years will be crucial. But all in all, mixed set of numbers are expected. Revenue is expected to see a growth of about 4% sequentially, but consolidated margins could contract on a sequential basis.
Okay, thanks Ashisha for that. But let me now toss it across to Somit to help us understand the implication of the Novelis IPO. Somit, how should one read the price range that they've announced?
Well, Hindalco definitely will remain in focus on the back of the fact that it's a subsidiary, 100% subsidiary. Novelis has announced much more details about this IPO. Firstly, the price band that they have announced is around $18 to $21 per share, and it's an OFS where Hindalco's arm will be selling around 45 million shares, and there is also a green shoe option of selling additional 6.75 million shares if there's an oversubscription. Now, post IPO, Hindalco will own close to 92.5% stake in Novelis and 91.4% if the subscription if there is an oversubscription in the offer. Now, if you look at the valuations, given the fact that there are 600 million shares totally in Novelis, the market capitalization on listing could be anywhere between 11 to 13 billion US dollars, and given the fact that the company has a net debt of close to 5,300 million US dollars, the enterprise value of Novelis comes to around 16 to 18 billion US dollars. Now, this is around 7.3 to 8.1 times its FY26 EBITDA, which is slightly higher than what the street has been estimating, anywhere between 6.5 to 7.5 FY26 EBITDA. So the valuations are favorable for this IPO. Now, from this IPO, what Hindalco will get is anywhere between 810 to 1100 million US dollars, depending on how many shares get subscribed and what price they are finally issuing these shares. Now, the key question here is how will Hindalco utilize this proceeds, given the fact that Hindalco's domestic business is a net cash company. It does not require cash for its capital expenditure, and so how will Hindalco actually utilize this proceeds, given the fact they also will not be putting in this money into Vodafone Idea. So most likely these funds could be utilized by the company for an organic or an inorganic expansion. So keep an eye out for Hindalco. Most likely post the IPO is concluded, there could be some expansion notice coming in from Hindalco going forward.
Right, okay, that's that on both Tata Steel as well as Hindalco. Siddharth, what's your opinion on the entire metal cycle? Of course, you know, Hindalco seems to be a special situation stock right now because of the Novelis IPO pricing now out. But where do you think we are in the entire metal cycle?
Yeah, Aisha, I think rightly said, Hindalco, because of the Novelis IPO, is definitely special in a special position. But if you look at the core business itself, the results were pretty good. Revenue for Q4 was up 6%. PAT grew about 36%. Going ahead, the company is looking at reducing the cost of production, especially in the aluminium business. And Novelis is likely to see improvement in margins over the next 2 years with capex on the value-added businesses, which would make not only the business structurally more long-termish, also giving more margins headroom for the company. So I think overall, we definitely like Hindalco, and we have a target price of 790. Overall metals pack, we feel that while the Q4 numbers may not be that great, going forward things are incrementally looking better with the growth in China recovering. Demand is pretty strong, and the base metal prices also seeing the kind of improvement. So what we believe that this is just again the start of recovery mode for the metals companies, especially the base metals. So both ferrous as well as the non-ferrous, which is mainly the aluminium companies, both would do well in the coming quarters. Within the ferrous side, we like a Jindal Steel and a JSW Steel, which we both of which on which we have a buy rating. And to support that, we have also positive view on Coal India as well as NMDC, both of which are dependent on the overall metal pack.
Do you have a view on Paytm as well? Since morning, it's been in the news flow regarding, seeking some investors, not seeking some investors. But fundamentally speaking, what would you do with this stock now?
Yeah, Aisha. So I think, sorry. So if you look at Paytm, I think definitely news flows is directing the stock price in the current environment. But the biggest challenge is the RBI regulation, which has kind of impacted the banking business. And that is something which will take time. For the core wallet business, they are continuing to tie up with a lot of other banks and managing to do the wallet transfers. But the key growth for the company going forward, what we had envisaged earlier was on the lending side and on the distribution side, which is kind of now getting impacted. So I think only if the management change happens and they are able to procure that approval from RBI to get back into the payments bank business, that would be a big trigger for the stock. Otherwise, Anisha, if you look at, I think we'll have a neutral rating right now, and we are wait and watch situation for Paytm.
That's the take coming in on Paytm. That's been quite the story of the day. Started off gap up and has managed to be in circuit all throughout today's trading session. But Kunal, avoid, right?
Yeah, avoid. I think no major trend. The stock is still below its long-term averages. I think just on the expectation of the news flow and this kind of a price action over the last couple of days, I would not initiate a buy.
Okay, that's that on Paytm right now. Jubilant Pharmova has come out with its numbers in the meantime, but the one which is holding out today is Jubilant Foodworks. Osho, let's get a chart check here on Jubilant Foodworks from you, and even the other peers like a Devyani International, etc. I don't know though if you track them that closely.
See, coming for Jubilant Food, yes, this counter has seen a very strong surgence in the last 3 trading session, and finally it has came above the 200-day SMA on the daily time frame. So that can be a relief for this counter for the timing. But looking at the recent development, there it might attract some profit booking also. So 500 should be acting as a support for the timing, and I'm expecting if it consolidates above 500, then in the coming period there can be some kind of reversal or some kind of traction that can be seen in this counter. So on the higher end, the next immediate resistance is seen around the zone of 530, while the support lies around 500. So this is the immediate trading range for Jubilant Food, and it is expected that dips should be auguring well for the short-term traders.
Okay, point taken. So that's a view coming in on Jubilant Foodworks. But Siddharth, on that note, we let you go. Appreciate you making time and speaking with us today. But let's take the closing trade ideas from a technical expert then. Kunal, what's the closing trade idea that you are spotting?
So it's Biocon, which I would recommend at current levels. I think it's an interesting chart which is now shaping up. It's almost coming back towards the previous major multi-week closing high. So I think around the 320 plus mark looks very attractive.
Okay, and Osho, what about you?
See, basically, there are 2 calls which are looking very positive. First one is GE Shipping. GE Shipping has seen a very strong traction in today's session, and it is approximately around the zone of 1055. So that is one of the counter which I'm recommending a buying on for a target of nearly 1100, and 1020 should be kept as the stop loss. The other counter is Torrent Power. Torrent Power, although was having a very strong movement throughout the day, but in the last 15-20 minutes, the counter have seen some kind of correction and has dipped towards the zone of approximately around 1440. So that is also a very good levels to accumulate this counter. There has been some tweak in the levels because I was recommending it at higher levels around 1450 to 60. But now one can buy this counter at current levels, keeping a stop loss of 1400, and the target that I'm expecting will be of 1480.
Okay, point taken. Just wanted to highlight Saparna. Motherson as well, because that stock has actually piled on further gains. There's almost a 5% move on that one. Let's pull up the intraday chart on SAMIL and see where it's headed now. And the other one which is reacting to the earnings just hitting the screen is Mazgaon Dock, because that stock has now suddenly shot up 9%. It was trading high by 5%, but the earnings have just come and that stock too has managed to see a further spike, because all of these defense names have reported a good set of numbers, and I think Mazgaon Dock is also getting added to that list. Kunal, before we head into that break, any word on these Mazgaon Docks, Cochin Shipyard, Garden Reach of the world?
So Mazgaon Dock is looking interesting. The price volume breakout again has been confirmed for the stock now today, breaking past about the 3,300 levels. From the other pack, I would believe HL is also something which has now come back into a breakout mode. So I think after 2 days or 3 days of price correction, today the stock has come back about that 5,100 mark. Intraday it was about that 5,100 level. So I think that's also another name which is looking attractive. So I think the entire pack looks quite strong, and as a trading strategy, I think a 200-point dip, for example, into these names like HAL, that's 4% to 5% dip, should be considered as a good buying opportunity.
Okay, let's take a very quick break. Then on that note, when we come back, track the last half an hour of trade this afternoon.
If you like this video, then like, share and subscribe to ET Now.